This is Stan.
Hey Stan, this is RJ Bates. How you doing?
RJ, I'm good. Thank you for calling back.
Yeah, man, we were playing a pretty epic game of phone tag there.
It happens, man. But we're connected now. So what do we do next?
All right, so you got property you want to sell me. Let's see here. How much are you wanting to get for it?
Well, the comps in the area. We live in a mountain resort type community.
Yep.
And so a lot of high-end vacation homes, several residents. So the comps in the area are between about 800 and $1.6 million. So we're certainly not at the top end of that. But if those kind of numbers are outside what you guys normally do, then you can tell me that now and we'll save the rest of the conversation.
No, it's not necessarily that. I mean, it's all about the values in the area. So it's not like, is that a scary number? No. It just, for us, it depends on what is our exit strategy, right? So what can we do with it? Is it obviously the price point limits our abilities to either keep it as just a traditional long-term rental. It limits our ability to sell or finance, right? So those are two exit strategies. That really leaves us with short-term rental, Airbnb, or flip it. And flipping really is only if it's physically distressed, right? So
this isn't a flipper for sure.
Right. So I guess it just depends on, like, I know you said you want to sell without a real estate agent. On one of my the voicemail you left me, you said, hey, I'm just looking for like a quick sell. So just, I guess, kind of walk me through what you were thinking as far as, like, what's your ideal scenario? And then from there, I can see if it can fit for us.
Sure. So the reason we even started down this path is we're looking to try and, make the best profit we can off the home. And by using the conventional realtors and just the local kind of real estate model, it limits us to people in this area. So we've reached out to some online options like yourself, hoping that in addition to selling or buying properties and then, recovering your investment in them and so on, you might also have a Rolodex of high-end buyers, because that's really what this is going to appeal to. It's over 4,000 square feet with patio views of the Red Mountains right outside the living room windows. So we were hoping to be able to get a reasonable cash offer somewhere between those comp ranges, and then hopefully, based on the quality of the property, you as the investor can see it isn't a flip house for sure. Either reselling it at a higher rate because you come in a little low and we work that out, or being able to manage the property as a 30-day minimum Airbnb or something like that.
Right.
But our main reason for reaching out beyond the traditional model is to try to engage with other home sale, home purchase experts that might have a list of higher end buyers.
Well, I definitely have that. I'll just be honest with you. They're all investors though. So it's like, from the perspective of, do you have a mortgage on this?
We have a mortgage on the home. Yeah, we owe about $500.
Okay.
And like I said, the most recent comps have been selling between 800 and $1.6 million. $1.6 million was a brand new, 5,000 square foot home out on the edge of a vista, one of the premier homes up there. The 800,000 range is the log cabin style homes that are very rustic and ornate for the area, and just some other really nice custom homes. This is not a neighborhood, a residential type development. It's a private community, and it's at 7,500 foot elevation. So it really is one of those luxury homes but I'm afraid if we just dip our toe in the traditional real estate market water, we're not gonna be able to get what we hope to get for it.
I hear you.
And I say that based on the limitations of the local realtors for buyers of that caliber in this area. We're in Cedar City, Utah. Utah's one of the fastest growing states. There's a heavy migration from California, to the states just east of them. And so there's been a fair amount of activity up in our development, and it's all been, doctors, lawyers, high-end investors from Saudi Arabia and oil, and they're coming in and buying up these beautiful homes as their vacation homes. So we thought we'd give it a try and see how we do.
Understood. All right, give me a few minutes. I'm looking around the area, familiarizing myself. Man, they got 60 acres for sale over there for $425,000. Jeez, have you seen that?
Yeah, there's some land available. What you have to do is obviously, right, you got to really check it out. The topography where we live is rugged.
Right.
It may be 60 acres of something you wouldn't be able to develop.
That's okay though. I own a mountain. That sounds pretty cool.
Yeah, that's what I'm saying. There's local businesses, farmers, vendors. They need grazing pastures, water trails. So a lot of these owners of just massive chunks of property are not only have the asset, but they're making their money in these relationships with the local economy, which is agriculture, primarily agriculture, livestock.
Right. So what kind of view does your house have?
Spectacular. And I'm not one to brag. I'm telling you, when we walked in, that's what sold us. We have picturesque plate glass windows from the living room that look out over the Red Mountains. You don't have to put any decorations on the walls in your living room because the views outside the window are all the beautiful amenity you need.
Right. So when you say you want to maximize, so you say, comps range from 800 to 1.6. What is like, if I said, all right, Stan, I'll give you 800,000, but I need 60 days to do what I need to do. Would that make you happy? Is that what you're looking for?
The 60-day issue is not a big issue at all. We have time. That's why we're trying to explore these options. I'm hoping if I were to just list it right now based on the comps, we'd probably list it at $1 million, maybe $1.1 million, and I'd probably take 900. So I don't know if that blows me out of your range as well. But that's kind of, you're asking me what's my ideal scenario? It'd be that, because we invested in developing the second level of the home, so it's double the square footage it was when we bought it, and we're trying to make sure that we keep ourselves whole from that investment.
So really, you want to be, well, if you accepted an offer at 900,000, I mean, after commissions and stuff, you're pretty close to 800, So that's what I'm saying. Like, without any commissions or anything like that, net, if I said 800, is that something that you would entertain?
Yeah, I mean, I would certainly crunch the numbers on it. Like I said, our payoff is 5, and we expanded the home by 2,000 square feet.
Right.
We're just trying to recover that investment.
I'm also curious. I mean, what are your thoughts? Well, it's a lot of money though. Let's say, what if I just gave you a check for $300,000 and took over the mortgage, but it's such a large amount, it kind of defeats the purpose on doing sub 2. Where are you going to move to?
Well, we have another place already. We keep a condo on the coast in California, so we'll probably transition there. And then our primary objective is to get closer to our grandkids. My daughter just had my second grandson, and they're in Laguna Beach, California, which is Southern California. So we're hoping to migrate a little closer to that area. We bought this home, my wife and I, when we retired, and we wanted to have a little adventure. We had wanted to explore mountain living, and I personally wanted to have an experience living in a state other than California. So we've been here on the mountain for the last 2 years, just kind of enjoying the change of lifestyle. And we toggle back and forth between the mountains in Utah and the coast on the beach in California.
So let me ask you this. Do you actually need the cash from the close, or would you be open to a seller finance sub 2 hybrid where you could get paid in monthly payments?
Yeah, I think the challenge that would pose to us is not having the equity if we wanted to invest in a home in California different than the one we already have.
Right.
And the house we have, the condo we have in California it's probably a 2-hour drive to my daughter's. So we were just hoping to get a little closer to her. Our challenge is going to be when you start down the coast of California, everything just gets more expensive. So that'd be the reason we were looking for some cash is to take that equity and buy down a mortgage on a new place closer to my daughter.
Makes sense.
So I'm just sharing a little bit of my thinking with you.
Yeah, I mean, if we say you're staring at like roughly $300,000 to $400,000, I mean, were you thinking that was going to be the full amount? Because I mean, here's the thing: there's when we look at it from like the short-term rental perspective, or even potentially trying to find somebody that wants to own this long-term, like what you're talking about, those high-end investors that we know. I just want to be able to explore all of our options, because to some people, they might say, I'm willing to pay a lot more if I can get the creative terms, right? So instead of saying they'll pay $850 or $900, maybe they would say, well, I'm willing to pay $1.1 million if you'll let me take over that $500,000 mortgage and then finance me the $600,000, and I'll just pay you monthly. There's a lot of creative plays there. But realistically, if you're looking at saying like, hey, I need cash because I'm going to want to buy a place to get closer to my daughter, then that's probably where the cash route is going to be the best for you. But it's also going to be, just to be honest with you, it's going to be the least amount that an investor is going to be willing to pay as well.
Right. So on the first scenario, and if we lose reception, RJ, I'm really sorry, but I'm actually traveling up the road to the house right now.
I got you.
There's a couple dead spots. On the first scenario that you just described there, a little higher price with a combination of mortgage assumption and financing. Maybe is there a third element that could be dropped in there? Like the amount we're going to finance is $400,000 or $500,000, but we're also able to give you $200,000 up front. So it's it's kind of a hybrid now. You're giving me a little bit of cash, and we're financing the rest on the difference of the equity of the sale in the home.
So in that scenario, from an investor standpoint, there's always the bandwidth of how much money am I putting down $200,000. So in that case, it almost becomes I would rather pay less for the property and just pay all cash, because at some point in time, like from an investor's, what we do is we're always using somebody else's money. We're never using our own money. So it's about, well, if I have to go get 200 from somebody, it's almost easier to get 800 from somebody and say, this is what we're paying for it. And, we're free and clear. Instead of saying, well, we owe 200 and then we're going to owe 500 and then we're going to owe 300. It's like, oh man, that's messy. Can we just pay them all off? That's kind of where it goes.
You know what? I'm with you. I would prefer that. I'm on the seller's end now. So
right.
If that cash deal was anywhere around $1 million, 900,000, we would be having really serious conversations. And maybe to help you out, I can email you some pictures of the home. I can show you what the views look like. You can get a little bit of a first-hand look, at least at this particular property, because there are some nuances to living up on this mountain. And like I said, there's a lot of log cabin style vacation homes. They're spectacular, but they're also expensive to maintain. They require, seasonal treatment of the wood on the exterior and that kind of thing. And so our house is not in that mold. It's a traditional 2x6 construction, stuccoed house, metal snow roof, beautiful patio and deck. So, 4,000 square feet, 6 bedrooms, 3 bathrooms, gourmet kitchen. So there's a lot to it. And maybe I'm not going to be able to do any better than I would on the traditional market, but I thought I'd at least explore it. All you kind of investors can do is tell me no. So,
here's my thing. It's like, if you told me, hey, I want 900,000 for it. Okay. Let me see what I could do with giving you 900,000. It's really no different than going on the open market. The difference here is that I'm going to be presenting it to investors, not owner occupants.
Gotcha.
And I don't need like a long time to get the feedback. So, right. This is pretty much going to be like, I present it to the investors. They say, I absolutely have been dying to have this. Or what they're going to come back with is say, I want the house, but I need it on these terms. And then I can present those terms to you and see what you say. I think that's kind of what you're wanting, is just to really get it out there in front of the investors' eyeballs, and we can do that. To give you an idea, let me pull up in my system here, and I can tell you specifically what we can do. So Cedar City specific, okay?
Yes.
I have 184 known investors just in that city, okay?
Okay.
Now, what county is Cedar City in?
Iron County.
Okay.
Iron County, Utah.
Okay, so in the county, I have 2,730 known investors in Iron County.
Yeah, there's a ton of money here.
So my thing is if you say, hey, I see value in that, what I need from you is to say, here is the specific dollar amount that I will take for the property. If that's 900, then it's 900. The higher we go, the more laughable the investors are going to look at us and say you're crazy, because they have to have some sort of exit strategy, right? So right. I think 900, based off of what I'm seeing here, the throttle is getting a little high there, and we might get some offers on it that come in a little bit low, and we work it for a couple weeks, and maybe we can get somebody to come in. That's That's realistically what I think we could do for you.
I think that's a great strategy, RJ, and that's what I was hoping, is that I'd find one of you online investor types that would be willing to do exactly that with me and see how we pan out. Maybe it won't. Maybe I'm overthinking it, but I'd appreciate the opportunity to try. So, what else would you need from me because I could tell you, if you take an offer out of 900,000 and somebody's willing to do that, sees the value in it, sees the potential in this area, what the future looks like in this region, then I'd be happy to sit down and try to talk turkey.
So in order for me to present this to investors, in order for me to market the property, I have to have what's called equitable interest. And what that means is I need to have a contract to purchase the property for a price. So that's what I'm saying. I have to have some dollar amount from you. So if it's 900,000, what I would have to have is a purchase and sell agreement with you for 900,000, and we would put a timeline on it. So, for example, we say, all right, you're going to sell me the house for 900,000, and you're going to give me 3 weeks inspection period. That's my 3-week window to be able to present this to the investors. And then I just need pictures, pictures of the property for me to make people interested in seeing it,
Right.
and get those pictures. We send it out to our investors. I put someone on my team that will specifically call each one of those. Like, my system literally gives these investors a buyer score. So, for example, the guy on top, he has a buyer score of 702,000. All right. To give you an idea, for every house that you buy, it gives you 1,000 points. The guy buys a lot of houses. Okay.
Yeah.
So we go down and we call those individually and we say, hey, did you see that new property that we just presented? Is this something that you're looking for? No. Okay. If not, why? And then we get their feedback, and then we can come back to you and say, hey, this is the feedback that we're receiving from the investors. Listen, we're going to know pretty quickly if it's something that is interesting to people or not.
Yeah, that's all good. Is there do we have any personal obligation once we put together a sale agreement with you in the event that it falls apart or we don't get any deal? Or, in other words, what's my risk involved in?
Your only risk is that if I find an investor, you can't back out on me. So for example, if I get somebody, you can't say, hey, I found Johnny over here that's willing to give me $950, so I'm going to go with them.
Yeah, no, I got you.
But if I don't find anybody in the 3 weeks, then we just terminate the contract. We shake hands and we say, well, Stan, we gave it a good run, And I like to refer to that as me getting Utah. So Utah's a tough place because it's growing, right? It's when I say it's tough to acquire properties. So not to sell, it's tough to find them because the majority of people say, there's a lot of people moving here. My property is appreciated. They know the value. It's also appreciated so much that the cash flow has gone down. So there's a lot of people that are saying, hey, buy my house for $400,000 and it's rented out for $1,000 a month. And it's like, that doesn't work. So from that perspective, no, you don't owe us any money or anything like that. It's just the only thing that happens here is either we find an investor and you get $900,000, or we don't and we shake hands and we say goodbye.
Yeah, well, I don't think I'm going to know how well it will do unless I try, RJ. So I'm willing to take that next step, and 900,000 would be the figure I'd give you to work with.
Okay. Well, what I'm going to do is I'm going to write up a contract. I'm going to send it over to your email, and I'll have one of my team members call you to discuss, hey, these are the pictures that we need. And then also they'll want to know, like, if we do have someone that's serious about wanting to buy it, they're going to want to see it. How do they gain access? Sounds like you're there. So you could probably show them the property and whatnot. And then we just go from there. So yeah, I'll go ahead and write up that contract. Let me just verify one last thing. The property is in both yours and Nancy's name.
Yes.
I do have your email. Can you text me your wife's email so I can send it to both of you guys?
Absolutely. And is this number we're talking on, is that the cell number I can text?
Correct.
Okay. All right. I'll text you Nancy's email, and then we'll be on the lookout. And thank you. Thank you for sticking with me, too. You know, we're running around. Everybody's busy. Summer's coming. And you were impressive because you were persistent, and that's a lot like me. So thank you.
Thank you, Stan. Well, I appreciate that, and look forward to getting this deal done for you, okay?
Okay. We'll be in touch. Thanks.
All right. Bye-bye.
Bye-bye.
That was Utah.
Oh!
Okay. Now, here's the thing. This is like a 4,400 square foot gorgeous mansion on a mountain. I mean, this is one of our comps.
Dang!
Yeah. I said, what's your view like? And he goes,
I heard that.
Unbelievable, you know? So, no, you can send it. Cassie's gonna take over real quick and take this call. I'm gonna take my break because I got a Utah contract.